All right, so there's always a lot of debate out there in the investing world of what if you can only own one ETF, right? What would it be? Or one stock, but I think that that's a different question. So today I wanted to talk about the one ETF that I would pick, and the most common answer would be an S&P 500 index fund, right? That would for sure be the most common. The most popular are the SPY and VOO, right? The Vanguard one and the just the S&P one, right? Other ones, there's a lot of people that would argue the QQQs, right? The Nasdaq 100 ETF. Other common ones would be SCHD is one that I like, although I still wouldn't pick SCHD. There's a lot of people that like the covered call funds, right? JEPI is probably the best one, at least in my opinion, that I've seen so far. Now there is sector ones, but JEPI is just a more broad one. Uh, my pick would be one of two different ones, and if I had to pick between them, I'd probably pick a small cap ETF. The Vanguard one is ticker symbol VB, and the reason for that, there's two reasons. Number one, over the long run, small cap will outperform large cap, which is what uh, the S&P ones will be, the NASDAQ ones will be, and even SCHD will be, right? Again, if we go back 20 years, VB is up 303%, the S&P is up 249. Now, again, a lot of people probably would say, oh, the NASDAQ's up more than that. Well, the problem with the NASDAQ, which is the other reason, which brings me to the other reason why I like this fund, the NASDAQ is very overexposed to one sector, right? And that one sector is tech. Almost 50% of the fund is in tech, right? And I mean, what? We're looking at 65% is in just three sectors, right? Again, the sectors that I like the most, it is the least exposed to. I mean, less than 1% in energy, only 4% in industrials. Um, Again, just not my favorite by any means. Not that it's bad. I mean, I think it's okay. But if you're a fan of the QQQ or the Nasdaq, then you might as well just buy a tech uh, sector ETF, right? Um, which again brings me to the reason why I like small caps. Number one, they've outperformed most major indexes over time, right? Small caps outperform large cap and mid cap over the long run. It's also more, the weighting is better, right? I mean, 18% industrials, 15 financials. It is still overweight tech, but pretty hard to find a broad index that isn't overweight tech, if I'm being honest. Um, Again, it does have more in energy. I wish it had more in energy and materials, but at least it's better than the S&P ones and especially the Nasdaq. The other one that I would consider is, although this isn't one that I would want to hold for like 30, 40 years. I mean, personally, I'm still in my 20s, so I got a long ways to go when it comes to these. But VBR is the small cap value fund, and that one hasn't outperformed the S&P over the long run. But I think that this is one of the most undervalued areas of the market right now. Again, financials is the most there. Industrials is the next highest. Consumer discretionary is the third highest. Surprisingly, I definitely wouldn't have expected that. Energy is definitely about the same. Materials is a little bit more. So honestly, if I was looking at the short run, let's say the next 10 years, I would prefer VBR. If I was going to hold something for 30 or 40 years, it would be VB. Now, again, there's other examples. I'm sure there's a small cap fund that's slightly better positioned than this one. I'm just using an example, right? If you look at the dividend growth, 3.25% a year, nothing crazy. If we look at VB, I think it's a little bit better from what I remember. Yes, it's actually growing quite a bit. The dividend yield's about half a percent lower, but the 5 year growth is 7.65, which is actually very nice, right? For an index fund, that is very nice, right? Um, Again, you're not going to have a crazy. Let's go back 20 years and look what your dividend would be on this fund. looking at a little over 6%. That's not bad. I mean, that's probably not going to be good enough to live on unless you have a crazy amount, but that's still pretty good, right? I mean, SCHD is one that I like, although it is more leaning towards the large cap side, which is something that makes me a little bit concerned, although I do like that it is heavily exposed to industrials, energy 9.5%, although it's definitely underweight materials. 12% tech. I'd prefer probably around 10% tech if I was going to look for a perfect number, but that's just me. Consumer staples, it is a little bit overweight. Financials, that's probably about right. Healthcare, that's probably a little bit too much. I'd prefer if healthcare and materials were swapped and energy was a little bit higher. But again, that's just me. But the best thing about this fund is the dividend growth, right? The dividend growth is off the charts, right? 14% per year. If we go back and look at the historical costs, I mean, if we go back 10 years, you're looking at about a 8% yield roughly, which is very good, right? I mean, if you hold this fund for 20 years, you're going to have a dividend yield in the double digits. If you hold it for 30 years, probably 20, 30%, right? So this is a fund that I definitely do like. If you're looking at just ETFs, a lot of people, again, like I say, the reason I'm not big on the just buy the S&P and go away or buy the Qs and go away, I don't think that there's definitely not as many people arguing to just buy the Qs and go away now as there was like last year. The reason for that is, again, the area of the market that is the most undervalued right now is small cap, right? Specifically small cap value. And if you look at over the long run, small cap outperforms mid and large cap, right? I mean, let's look at mid cap. I think it's VO. Yeah, it's VO. This is the Vanguard mid cap ETF. Let's compare it to the S&P. I'm guessing it's actually underperformed, which is kind of, I don't know. Yeah, it has underperformed, which is again the reason why I prefer the small caps, right? The small caps are going to be the most volatile, right? They're going to be the most volatile, but over the long run, those are the ones that get you the best gains. And that's, as investors, that's what you should be looking at, in my opinion, right? So again, I think that there's a lot of funds to compare. I mean, there's a lot of people that would argue VTI. That's another very common one that people would argue for. If we compare it to the S&P, I'm guessing it's going to be probably about the same. Yeah, it's actually outperformed slightly, which is good. 243 versus about 215. So that one's a total market fund, right? But it is, I believe, just the states. If we look at VT, that one's still leading the states, but this is another common one that people would argue for. Although, again, if we look at international stocks, a lot of people probably argue, well, why not China? Why not Europe? Why not emerging markets? Well, they all have their, I mean, VT is actually way underperformed the S&P, so that's definitely not a good argument. But China is concerning because they're a communist country. They don't have a free market, so that kind of rules them out, in my opinion. Europe has, I think that Europe, I mean, their demographics are a little bit worse than North America. I don't think that they're as innovative. Their economies are more not quite as kind to innovation as the States are. I mean, the States could be a lot better, but and I mean, emerging markets never really do emerge, right? I mean, that's the big problem with emerging markets, right? So that's why I prefer small caps, right? There's two main reasons to reiterate. The first one being it outperforms the market over the long run. The second one being it's better situated in the sectors that I would want to be exposed to, right? So again, that's just my 2 cents. I'd love to hear other people's opinions. If you have any questions, you want to talk, I'd love that as well. And the other thing I would mention is if you haven't liked, subscribed, commented, all that stuff, please do, and stay tuned for more.